A stock market just crossed 7,000 points for the first time ever. Not the S&P 500, not the Nasdaq. South Korea's KOSPI benchmark index just made history, and the vast majority of global investors had no idea it was happening. That alone should stop you for a moment, because buried inside this milestone is one of the clearest signals about where AI wealth is actually being created right now, not in the places most people are looking. Let me walk you through exactly what happened. South Korea's stock market spent decades hovering around the 2,000 to 3,000 range. Crossing 7,000 is not a small move. It represents a generational shift in how global capital views this economy. But the rally was not broad-based. It was not fueled by a booming consumer economy or rising wages. It was driven by two companies, SK Hynix and Samsung. Both of them make something the entire AI industry desperately needs: memory chips. Specifically, a type of chip called high bandwidth memory, or HBM. Here's what HBM actually does. When AI systems like the ones powering ChatGPT or Google Gemini process information, they need to move enormous amounts of data extremely fast. Standard memory chips cannot keep up. HBM chips can. They sit directly on AI processors and feed data at speeds that standard chips cannot touch. SK Hynix crossed a USD 1 trillion market value this week. That is not a typo. $1 trillion. For a South Korean chipmaker most people in the West could not name 6 months ago. Now here's what makes this story genuinely fascinating. NVIDIA gets all the headlines. Every conversation about AI hardware starts and ends with Jensen Huang. But NVIDIA's chips cannot function at full power without HBM memory from SK Hynix and Samsung. Every NVIDIA AI data center chip shipped this year contains SK Hynix memory. That means every AI server being built right now in the United States, Europe, Japan, and the Middle East is directly funding South Korean semiconductor companies. Think about that supply chain for a second. The AI boom everyone talks about on Wall Street is quietly generating enormous wealth in Seoul, and most everyday investors in the West have essentially zero direct exposure to it. This is where the practical question comes in. How did this rally actually connect to the bigger picture? This week, the US and Iran tentatively agreed to a 60-day ceasefire extension. That news directly benefited South Korea. Japan, too. Both countries rely heavily on imported energy. Lower oil prices ease cost pressures across their entire industrial base. For semiconductor manufacturers specifically, energy costs matter enormously. Fabricating chips is one of the most energy-intensive industrial processes on Earth. So when oil prices eased on ceasefire news, Korean chipmakers got a double tailwind. Lower costs and surging AI chip demand arriving at exactly the same time. The KOSPI crossing 7,000 was not random. It was the result of multiple forces aligning simultaneously. If you enjoy breaking down markets and money, subscribe for future updates. Now let us get to the part that actually matters for you personally, because understanding what happened is only half the value here. The more important question is what you can realistically do about it. Most investors outside Asia are dramatically underexposed to South Korean equities. A standard global index fund will typically allocate somewhere between 1% and 2% of its holdings to South Korea. That is it. In a week where South Korean semiconductor stocks moved violently higher, investors holding only US-focused portfolios captured almost none of it. But here is what changes the calculus going forward. The AI chip cycle is not slowing down. Alphabet just announced plans to raise $80 billion for AI infrastructure spending. Anthropic is approaching a $1 trillion private valuation. Every dollar of that AI infrastructure spending eventually finds its way into memory chips, which means it eventually finds its way into SK Hynix and Samsung balance sheets. The demand pipeline is not shrinking. So how do everyday investors access this? There are a few realistic pathways depending on where you are and what brokerage you use. The most accessible route for most people is through an ETF that tracks South Korean equities or Asian semiconductor exposure. ETFs like the iShares MSCI South Korea ETF give you broad exposure across Korean stocks. Semiconductor-focused ETFs with Asian exposure can tilt you more directly toward the chip cycle. For investors comfortable with individual stocks, SK Hynix trades on the Korea Exchange under ticker 000660. Many international brokerages allow direct access to Korean-listed shares. Samsung trades as a widely available ADR equivalent through global platforms. Now, a word of honesty here, this rally has already moved significantly. The KOSPI crossing 7,000 is not a secret anymore. The window to get ahead of this story was wider 3 months ago. What matters now is the longer-term trajectory. And the longer-term trajectory for South Korean semiconductors looks tied to one unavoidable reality. AI infrastructure spending is accelerating, not slowing. The biggest technology companies in the world are in an arms race to build AI capacity. They cannot build that capacity without HBM chips. HBM chips require SK Hynix and Samsung. That supply chain dependency is structural. It does not disappear in the next earnings cycle. There is also a geopolitical layer worth watching carefully. South Korea sits in a complicated neighborhood. Tensions with North Korea remain a constant background risk. The economy's heavy dependence on chip exports makes it vulnerable to trade policy shifts. Any deterioration in US-China trade relations creates ripple effects through the Korean semiconductor industry. Samsung and SK Hynix both sell to Chinese technology companies. If that trade gets disrupted, the earnings picture changes fast. These are real risks. Any investor considering South Korean exposure needs to hold them clearly in mind. But zoom out, and the picture is striking. A market most Western investors ignore just crossed a historic milestone. It was powered by chips that sit inside every major AI system being built today. The companies driving that milestone are booking record revenues, and global fund inflows into Asian equities are rising precisely because institutional investors have noticed the same gap that individual investors are only now beginning to see. Markets reward the people who pay attention to the whole board, not just the loudest names on it. SK Hynix. Crossing $1 trillion in market value is one of those moments. It tells you where real industrial value is accumulating in the AI era. Whether you act on it or not is entirely your decision, but the information is on the table now. That is what the numbers are showing right now. What you do with that information is up to you.